Throughout the life of your business, there's one constant that you're pretty much always thinking about, worrying about, planning about, celebrating about, or crying about. What is it? You guessed it. Money. Moolah, capital. Whether you're just starting a business, trying to make payroll, or trying to figure out how you can possibly go from making 100 widgets to 10,000 widgets, money is involved. So, you need money for your business, huh? Well, get in line. We might be able to help you. I'm not sure if money is the root of all evil, but I do know that money is the root of your business. It doesn't start without it, it doesn't run without it, it doesn't grow without it, and it certainly dies without it. At the Innovation Center, our main job is to help entrepreneurs and small business owners grow their businesses and become successful. It seems like the number one question I get asked from founders is, I have an idea and I have no money. Isn't there some kind of grant I can get? Well, there are a variety of funding options out there for businesses today. The trick is knowing what is best for that particular situation and what is expected from the sources of capital to secure it. Be assured that no one is just handing out money out there. Also know that whatever the source, you'll need some sort of business model and financial plan to lay out what you're going to do with the money, how much you need, and how the capital provider is going to get paid back. For money people, this discussion all revolves around one word which you should become very familiar with: risk. With each source of capital, you need to understand the risk on both sides, yours and the money provider. Once you know the risks, you can help manage them and make it more likely that you'll actually get the money in the first place.
When a bank is looking at a small business, especially a startup, our biggest job is evaluating the amount of risk involved and mitigating those risks so that there aren't as much risk both for the bank and for the small business owner. We're a lender, we're not an investor. So we want to minimize our chances of having to be the decision maker with that business. They need to have a well thought out business plan so that they can demonstrate to the bank that they've thought this through, they've thought through all the contingencies. They want to have capital in reserve or other sources of revenue to tide them over if the initial plan doesn't happen as quick as they expect it to, if they run into bumps along the road, so that the bank knows that they're not going to have to step in and take control.
So, let's review 8 sources of capital to help you fund your new or existing small business. Number 1, yourself. Although the popular and glamorous picture of business funding today is convincing other people to give you money, the prudent method is always to find any way you can to finance it yourself. Savings, home equity, 401ks, severance, etc. are all common first sources of capital because it's not always easy to get anyone else to believe in your dream. For yourself, it is just as important to judge your personal level of risk and think about, what am I willing to lose if it all goes bad? Number 2, company operations. If your company is already in operation, can you use part of the cash flow to save up for what you need? If not, how else can you use what the company owns or is worth to generate cash? Again, risk is also a big factor here, so think carefully. Number 3, the 3 F's: friends, family, and fools. Relatives can certainly be a source of help, but be careful. Remember that they will still be your relatives or hopefully friends after the deal is done, good or bad. Number 4, grants. Yes, many grants do exist, but they also take a lot of time and effort to get, and most are very competitive and very specific. If you are willing to put in the time and have the luxury of waiting longer to make things happen, go for it. Remember, it's always a good idea to actually talk to the granting agency ahead of time. Find out what they are really looking for and develop a relationship with them. Number 5, loans. Loans have been the primary source of business growth capital for many years. This is a good source of capital if you are very certain of an income stream to pay it back or can live with the consequences. Commercial banks vary in their tolerance of small business risk and the types of programs that they offer, so ask around.
When you're starting a business, I think it's important to be talking to a banker so that you can get their feel for what they're going to be looking for individually for your type of business. The parameters of what a bank will lend will vary from industry to industry. I think it's important too to have a good relationship with a banker because there are 5 C's of credit. The first one is character. So you've always got to have cash flow, collateral, the conditions have to be right, and you've got to have capital. But if you can have a relationship with a banker that he can determine your character, that's going to go a long way towards making sure that you get the right bank set up when you're starting your business.
In most cases, banks are going to require personal guarantees, a solid business model, and a credible management team to make them feel more at ease with giving you money. Of particular interest may be SBA loan programs which offer better terms. Number 6, partnerships. One source many people don't think of very often is creating a partnership with a potential development partner or big customer that could provide capital in return for something they want. This includes licensing rights, equity, or the ability to manufacture the product. This is a great option because it gets you down the path of sales and revenue at the same time. Number 7, crowdfunding. Crowdfunding is a relatively new and interesting source of early-stage capital where individuals give you money, usually from an online portal, in return for rewards. Kickstarter and Indiegogo are 2 examples of over 1,000 platforms. Get some experienced advice before you try this because it's not as easy as it first seems to convince people to give their money to you. It's certainly worth a try. And number 8, professional investors. It's Shark Tank, and it's not for the weak at heart. Getting capital from angel or other professional investors requires a lot of planning and professional help to make work. Only a very select group of companies fit here, but if you are going big, go for it. Well, as you can see, there are a lot of options to fund startups and small businesses today, and none of them are easy. They all take preparation. My best recommendation, start by asking for advice from the capital sources themselves. There is nothing to be afraid of. They've heard it all and seen it all before. Just get started. This is Mike Fritsch with the Northeast Indiana Innovation Center reminding you that nothing happens until you start.